Welcome to episode 51 of Bitcoin Elliott Wave Analysis. This is Elliott Wave Cafe. I am your host, the Cowboy. Let's get started. All right, so come and say hi on Twitter. You can find me here at Elliott Cafe. Come and have a discussion with me about Bitcoin, about altcoins, macro, anything that you like and you're interested in. If you have any questions that you want me to answer or any help with Elliott Wave, that's the best place to kind of get in touch with me. Come over here, give a follow, and we can open up a discussion. You can also find me on Telegram. This is my private room. Up in there, we discuss macro assets, Bitcoin, and altcoins. There is a link below the video where you can come and check us out as well. So without further ado, let's get going on Bitcoin. I'm going to start with the negative news first, then we're going to move towards some positive. But yeah, Bitcoin had a tough year. We're in the month of August, and we're going to get into the last quarter, and things are not looking that good so far. The Bitcoin is down about 56% year to date, and well outperformed by oil, which is up about 39% still, even after this pullback we've had. And then it's followed by the dollar, which is up almost 14%. And then we're getting into some of the negatives, right? You can look at gold down 5%. Emerging markets 17, the Qs, Nasdaq up there down 22%, and the S&P 500 down 14. So a bunch of asset classes are actually outperforming Bitcoin. Bitcoin, it is a play on risk. It's got a very high beta, and it's very, very sensitive, seems to to interest rates and liquidity, and it's been kind of hurt this year. We're going to take a look at the wave counts and see if there's any more downside, if there are any signs of a return to positive, and let's see if we can finish the year strong, or if there is a new big wave of selling coming. Now, that's what we're going to take a look here next. Take a look at the Fed funds futures. And you can see this is one of the most aggressive interest rate hikes cycles, I think, in the history of the Fed. Look at the shape and the size of this big impulse of the lows, right? We've enjoyed a pretty low and not negative, but near zero monetary policy there, interest rates. And they've gotten aggressive, especially because of, high inflation in here. Jay Powell had a big speech. It wasn't actually as big. It was about 8 minutes, but it was very concise, very, very clear in his messaging towards the market that he's going to continue to try to fight inflation. And he's aware of the pain, that could be happening into their, risk assets and to the economy. But he's pretty much set in continuing to raise rates as long as it takes until he sees inflation coming down. And we've gotten some signs in the month of, I think, July, of some reduction in CPI, but it's very, very minimal. So they're still, I think, rather scared on it, and they're going to try to push this. And the markets, had a pretty big reversal on Friday. It actually started since they've hit that 200-day moving average, and they're, trying to kind of come back down. We'll see if it's the beginning of a new leg lower, if it's just, a quick correction, a quick scare, and we're going to continue higher. So Bitcoin obviously, suffers in periods of increasing interest rates. There was another period from 2017, 2018, if you remember, Bitcoin had that large correction, and that also happened during this, hiking cycle from the Fed. And then obviously, you're looking at March 2020, and then, the huge liquidity that was thrown out into the markets, and Bitcoin was able to rally towards 70,000 during this period. So now kind of coming back, it's kind of fair to assume a little bit of a, underperformance from this market until Fed finishes off this hiking cycle. Then they're probably going to pause and then, begin the rate cut. So, markets are usually forward-looking. They are probably going to try to get ahead of the Fed on that as soon as we're getting hints from the market, from the Fed, that that's the case. So far, that still remains a big open question. So we're going to continue to watch price and take our clues from there, from the wave counts, and just kind of try to read between the leaves in kind of what the market is telling us. All right, so let's jump over and take a look at the counts. This is the wine count. This is the major one that I've been carrying for a while in here, and you can notice this very strong trend line coming back from 2015, 2016, and connecting the swing lows. And that's where the market actually stopped around June 18th. And since then, we've tried to rally a little bit higher. It was not a super strong impulsive move, but we did hold the trend line, and we're probably going to try to hold it in this decline as well. This is kind of where the markets are currently trading. This was about an 80% decline in Bitcoin into the 78.6, and I'm talking the arithmetic scale, and we're gonna continue to kind of watch this. I still think that we're in a pretty important bull market in here, and it's important for Bitcoin to hold these levels for this trend to continue. If we're starting to lose this, and I'll show you that, if we're starting to lose this trend line, we're probably going to move into a much larger correction in Bitcoin that can take another couple of years to unfold. So we are at the big decision levels in here. That's kind of how things start, right? They're testing them, they go back up, they test them again, and if the market is strong, if there's enough bulls in here to take charge of this market, then we should be trending higher. If we're going to lose this trend line, and it has to be lost, for probably, I don't know, it's a couple of weeks at least to come back down, because you could get those false breakouts as well, right? When everybody thinks, oh my goodness, this has broken, and then everybody gets bearish, and then, you start to correct higher. So we kind of have to watch that down the line. The next look I have, I'm usually looking up at the candlestick charts and, the resistance and the supply levels. I think these are just basic, it's kind of technical analysis outlook. And you can see the trend line again here in this dashed move. Bitcoin is clearly in a downtrend since 69,000. And this is let's say a cyclical bear market within more of a secular bull trend. And it's obviously testing that kind of longer term trend line at the moment. These are the highs from 2017, which are near 19 to 20,000. That's the levels that we held on this first approach, combined with the trend line we've got in a bounce up. We were able to kind of rally back towards the middle of this channel, then we kind of got rejected. And now we're coming back to retest these levels. If we're losing these and we're selling lower, I think the next level of horizontal support and in that kind of wave decline will be anywhere between 12 to 14,000. I think it's where the markets are probably going to get targeted if we're losing this levels up here at about 19.6, 19.7. We're trading currently, I think, at about 20,200, so just slightly above 20,000. For me, to kind of get more confidence that we're finding lows, I still think that some of these upside levels here have to be taken out. And I'll take a look at the moving average as well. So these levels here at about 30,000, I think it's very important. Until we're climbing back above those, it's really hard to, go and throw everything, bullish at this price action, right? We're trying to build something, but it's still very kind of weak, and the markets are still struggling to rally in here. So that would be a good signal climbing back above those levels. And now you're looking at the moving averages, and this is the last time that we've talked, so which was about almost a month ago. And, kind of where that arrow is when I've done the video. And at that time, we were trying to get established above the 50-day moving average. That was still pointing lower. I was talking about it at the time. The long we spend above the 50-day, the stronger this market looks. But it wasn't really able to rally. You could see that it tried several times, and I was talking to the members about this kind of failed setup in here, and we actually had some long positions that we closed at break even the moment we saw a secondary, I think it was just a multiple failure up here, and at about 23,500 we cut the trade out, and we said, I don't think this is going to work out. And then they dropped lower, and we're able to save quite a bit of capital by being away from any long positions based on reading the tape and the markets not being able to break above those levels. Then we lost the 20-day moving average, then we lost the 200 week, and then we lost the 50 again. So here we are now below all these moving averages, kind of trending lower one more time, which is a pretty negative development for price. But it's not all lost. I think there is a chance here that these markets could hold, and we're just going to kind of watch the price. There's a couple of counts here that show us that it's possible that this is just a corrective move against this move off these lows, right? But everything else kind of hints to a continuous downside, right? The bullish count in here, it's a little bit tricky to make, and I'm not going to get on board with it until I'm seeing prices climb back from these levels and try to regain the 50, regain the 200 week, and try to move back above these. Then I'm going to get more confident that I can actually long this market, and I'm going to put more credence into the fact that this was, let's say, a wave 2 pullback or a wave B pullback, and we can actually enjoy a move higher back towards 20,000 to 30,000 levels, right? It's really hard to kind of get behind that point right now, especially with the markets kind of breaking down on the equities. But if they're able to hold, if we're going to get buyers in here into the next week, maybe into the inflation data, coming back at about, I think, September 12th, September 13th, there is a chance that these markets can start to recover, and this was just, just a corrective scare from the markets. So that's kind of how I'm reading it. We're staying kind of on the sidelines. I still have some long positions via futures into one experiment that I'm doing regarding the fear and greed index, which, you would think that would be, I think we're still at about 26, 27 on it. And with this latest move lower, and I'm going to watch the updates here over the next couple of days, but it doesn't look that as coming down as deep as the price would kind of have you think. So we'll see what happens with that. But that's kind of what I'm watching, and that's why those positions are still going to stay on the long side, because I wanted to see kind of what happens with Bitcoin 1 year out after that fear and greed index moving average kind of drops below 10, and that's something I'm still running. I talked about this last month as well. So here is a look at the bullish count, and I'm gonna show you also the bearish one, just so we can have some arguments in there as well. And this is kind of how this looks. So if this was a wave 1 primary and we finished a wave 2 setback through this WXY, then we're looking at this move of these lows as a motive wave through the likes of a converging leading diagonal in a wave 1, 2, 3, 4, and 5. Now you can see wave 3 and wave 1, they're near equality. Usually I like my wave 3 to be smaller than wave 1. These are almost equal, but I don't think the rules are getting broken in here. So you get a 1, 2, 3, 4, and an up in 5, and then you're pulling back in what seems to be an impulsive move, which should be wave A of a corrective 2, then followed by probably a rally in a wave B, and then maybe another decline in a wave C. Then we can start to move higher. Now the invalidation for this count comes at about 17,622. So if the market goes even one tick below these levels, right, this wave count is invalid, and we got to look at something totally different, and there is no real bullish move that can be considered from these 17,600 lows. We're going to have to change the wave count, and if we still want to stay bullish, we got to look at something totally different, but that's going to be kind of very hard to do. So now there is a chance that this wave 2 doesn't have to do this B and C. There could be this little pushback in here to be a B wave. I still have a problem with it. I don't think that's the case. But the market surprised me many times where they're pushing lower in a deep, kind of almost like an impulsive look wave, and that's actually a wave 2, and then you're rallying higher, kind of leaving everybody in the dust. It's like, hey, I thought that's supposed to be corrective, and the markets kind of have a way of kind of working that out sometimes. But we have to stay true to the wave count, and we kind of have to look for more precision, and that would mean that the nature of this decline looks impulsive, so we have to respect it as such, and it cannot be the entirety of the wave 2. The wave 2s are obviously corrective, so they need an impulsive decline followed by a corrective move and then another impulse before we can finish a second wave. So we're going to watch what happens into the next week, and then look, to see kind of how this looks. If this looks corrective, then we're probably going to expect one more push lower. This is kind of how it looks on the smaller time frame. So 1, 2, 3, 4, and 5. Then you go down in a 1, 2, 1, 2, 3, 4, small 5. That completes a third. Then you go in this corrective fourth wave, which is a little bit bigger compared with this wave 2, and then you drop lower in this wave 5, which should be near completion. You could still maybe drop a little bit lower. You can see you have a big support right there, just above 18K, where this kind of red line is. That's a big horizontal support from back in July. And, that could terminate this fifth wave. Then you can get a bounce in a wave B, and possibly another C wave in a wave 2, and then the rally can begin. So, this does not look that bad, right? But what does look bad is the fact that, we have broken some of these trend lines in here, and that's kind of a bearish, more of a bearish sentiment. So we're gonna kind of hold on to this. Again, I don't want it to get bullish, so I'm not looking to buy Bitcoin just because, this looks like a leading diagonal and this might look corrective or there's a correction in here. I need to have that confirmation from price, and I want these prices to kind of start to climb back at least above this $22,000 level, right? And above these moving averages, which is, at about 23. So I need to see these prices climb, and then maybe by that time we can break this trend line. Remember, there was a big trend line coming from those highs, and that was rejected. So, as interesting as this could sound for trying to get ahead of the move and trying to buy something in here, even though the risk is small, right? You don't really have much confirmation for price. So depending on your risk tolerance, there's a couple of ways to play this, right? When you can, just kind of buy as the markets decline, and then, maybe add a little bit more on the C wave, but you have to be prepared to get out if this market breaks below 17.6. If you want to wait, for a little bit more confirmation, then, the prices actually have to start moving higher. And then, you might lose a little bit of, let's say, of a better entry, but you have a little bit more confirmation, and the trade is more secure. So it's a matter of personal preference. But in my view, I think due to the fact that you're still in a pretty big decline, and you're not, buying this in any kind of an uptrend, I think it's the smart play here would be to just wait for these prices to climb back above 22, 23, and then start to think about opening long positions towards 30 to 35,000. So that's just kind of my suggestion. That's kind of how I would look at this market, and that's kind of what I'm talking to the members as well. So now let's see if there is anything else. Let's just kind of take just a quick 2 seconds to show you this alternate. All right, this is still more of a bullish outlook on the price, but it allows for one more drop, just one more quick drop in this market that doesn't necessarily send us into a bearish, let's say, market, but rather, it can actually turn quite bullish from here. And that looks at this still being as a wave 1, but instead of a WXY, looks at it as an A, B, and then down in a 1, 2, 3, 4, 5, and C. And this whole thing could be just a big old zigzag. And all that's required for that is just a quick drop below 17,622, and then, you can start to enjoy a move to the upside. Again, you would have to climb back above this fourth wave. And it's just a different play on a bullish outlook that could terminate still with a quick move lower, right? And that's something that I really haven't seen out there, and I think it is something that kind of warrants paying attention to in terms of this being just a larger ABC decline. So I wouldn't necessarily get fully bearish if the markets break below 17.6, but just kind of be careful that that this could be the final fifth wave, and then you can that finishes wave 2, and then you can start to push higher. But no evidence of that as of yet, obviously. Now let's turn our attention to the bullish, to the bearish count, and this is I have it here under yellow. I've been talking about this for a while, and this looks at Bitcoin completing in a super cycle degree up here in this wave 1. Followed by this decline in a 1, 2, larger third, doing a fourth wave at the moment, or wave 4 still in progress, and then a final flush lower in this wave 5, back towards this, 2019, 2020 let's say, old resistance that could become support on the way down. I think that's a pretty massive level, right? Just around $10,000 to $12,000. And this would kind of line up with the further decline in this fifth wave. Now, what that would do, since this would be considered, let's say, a 5-wave decline, 1, 2, 3, 4, 5, this would complete wave A, only of a much larger wave 2. Then you would get a wave B rally. This would be a pretty strong move that can probably carry us, let's say, from 10,000 or 12,000, almost double to 24, maybe even triple to about 36K in a kind of massive B wave. And that would be met with resistance. It would be, let's say, a retest of this broken trend in Bitcoin in a wave B, and then the next larger crash and decline can come in Bitcoin that can take us below 10,000 towards, let's say, 6,000 in Bitcoin. And that could take, let's say, another couple of years to unfold, let's say from 2023 back into 2025 to 2026. So this is the kind of the longer term bearish outlook, because I don't think that this wave will suffice to kind of correct this whole large advance in Bitcoin that has been taken place since its inception, 2007, 2008, right? So that would take much longer to kind of correct. And this is kind of the bearish outlook that would come onto my radar next if we're breaking below these levels and we're starting to tag towards $10,000 to $12,000 in Bitcoin. So this is kind of the bad news, but it's also good news, because that even though you're going to get a drop in all the scenarios in here, you're having either a final fifth wave, right? You're having a C wave. You can have a Y wave completion. So all of them are starting to point that we're running towards the end of this bearish decline in Bitcoin. And however, let's say bearish, that could be still that a drop towards $12,000. It still looks, kind of scary. Just know that it's very likely going to be followed by a massive rally coming up next in Bitcoin, right? So possibly into, who knows, maybe 2023 throughout this whole year. So here is how this looks on a smaller time frame. If you look at the wave 1 and wave 2, then you got a 1, 2, 3, 4, and longer fifth wave to complete a larger third. Then you're looking at this corrections in here in this blue dotted line. They're very, very similar, right, in their shape. And this could be a finished fourth wave already, or fourth wave could still be in progress. Now, you have equality here between these two moves. And, the guideline of alternation said that this should be a little bit different. Now, it could be considered more of a complex move. This one was more, let's say, a quick ABC. But there is a chance that this could develop maybe still sideways in this triangle, maybe towards 23% retracement, maybe 22,000, and it might still take, let's say, a couple of months to unfold, maybe up into October, kind of move sideways, and then, crash lower in this final move. Now, again, we're talking equities, we're talking general macro. All the markets will kind of have to follow this as well and start to have a much larger decline lower. So that's why, into the Telegram channel, into the program, we're watching this every single day. And we're doing videos about, the S&P 500, the NASDAQ, oil, copper, all these kind of other macro elements. They're kind of helping us judge, how weak or how strong this market is and what's the best positioning to be taken regarding to risk. So this is kind of how this would look. If this wave 4 is finished, then, obviously a break below that 17.6 will unleash the next fifth wave. And again, it doesn't have to be that deep. It could be just a small move lower, but I think it could be pretty swift. So what would make me change my mind? Well, obviously, if this is, if you're getting a return back higher, right, above this 23,000 in Bitcoin, then it's going to become less likely that this outlook can still remain alive. So that's why it's important to kind of eliminate this bearish structure. I think it's important for Bitcoin to bounce from here and move higher above these levels. If that happens, I think that becomes more of a clearer signal that this low, it's a major low in Bitcoin, and we're not going to come back below it in a long time. So that's kind of what I'm watching. I think we're at a very, very important crossroad right now in Bitcoin and in the equity markets, and a return higher will negate that bearish outlook. So this is my outlook in Bitcoin, guys, and I want to thank everybody for continuing to subscribe to this channel. We're getting close to 5,000 subscribers on YouTube. Thanks everybody for subscribing, and don't forget to like and all of that. But thank you for watching my videos. There's plenty of things for you to learn Elliott Wave in here. You can go into my playlist, and there is educational videos and stock videos, and pretty much all of them kind of touch on Elliott Wave in one way or another. And although I don't have a full course that kind of explains everything from the beginning to the end in terms of kind of how everything is structured, you can get a lot of hints from the videos that I have in here. If you want to try the Pro Room, there is an Elliott Wave course in there. It's about 7 hours. It comes with the price of a 1-year subscription, and you can try that out, and you can kind of, start that journey with me if you want. And again, I do on there videos every single day about the markets, and you can pick it up much faster in there as well. But again, I appreciate you for subscribing and being part of this journey with Elliott Wave Cafe. So thank you guys for watching. Again, don't forget to subscribe and like. Thank you, and I'll see you on the next one. Bye-bye.